I want to make a change to the 200K portfolio. I want to share this with you, the rationale and why we're doing this. We're going to reduce our risk and increase our opportunity for the type of market environment that we are in. First, let's go over what we have for this month. And you can take a look here at the 200K portfolio. It's currently in an 87.50 drawdown from the most recent equity peak towards the end of July, I believe 26th or 27th of July. Let's take a look here to be sure. The last equity peak was on July the 26th. And now we've had an 87.50 drawdown since that time frame, minus 34.55 on the month because some of that drawdown was in July. You see the end of July drawdown was minus 51.3250, and then in August we are down 34.55. Let's show you what it looks like by market. I'm going to pull this up. I broke it down in the portfolio calculator by market, and you see we talked about how the E-mini S&P had narrow ranges. It's still up on the month. We've looked at the S&P over the years, and we figured out how to trade narrow ranges. So up 1962.50. Nasdaq and gold are the biggest culprits. And so we have an update for the Nasdaq. We're basically going to remove two trend strategies and add a counter trend strategy. And I'm going to show you how that works in a moment. Gold minus 23.50. We may go over gold. Let me be looking at gold again as well, the type of market environment. Right now today for tomorrow's trade, starting tonight on August the 15th, we're taking out two trend strategies, momentum strategies, using a counter trend strategy. Minus 700 in silver, 390 in crude oil, natural gas, 125, soybeans minus 187.50. Total is minus 34.55. So that is the monthly result that we see here. That is taken from the portfolio calculator by expanding this and removing each market sector manually and then looking at the results. And you see what we have here is a total net profit on this portfolio calculator for our research, 1,921,000, a drawdown of 20,750. This number right here, total profit over drawdown, will increase. We're going to reduce the max drawdown as well as the current drawdown, but the difference between these will be smaller, so we'll reduce our risk to worst case drawdown. And I'm going to show you what we're doing. I'm going to go ahead and save this. You could download this portfolio calculator from the portfolio calculator page. I downloaded this uploaded this on Friday night. There was an error, so I've uploaded another copy today or last night on Saturday. The natural gas trade from Friday that was profitable by plus 475 was not showing up. The text file did not write, and so the results are 475 better than the initial upload of this. If you uploaded it on Friday, be sure to download it again so you have the latest copy of this. And I'm going to show you, I'm going to do a save as, I'm going to do a file save as. I'm going to save this as a different name, and we do that to play with this. And so you don't want to play with the original copy. You want to play with a saved as copy. So I'm going to do a file save as and then come back and show you. So I'm pausing the video here. So you see I've done a file save as, and I've renamed this, added the word test to it. So it's a different file now. And I am going to expand the list and show you the changes that we're going to make. We are going to only trade the two trend strategies. There's only 4 Nasdaq strategies in the 200K portfolio. This strategy as well as gap continuation are in the 50K portfolio. Stock index swing has highly underperformed for a while, and I'm not a big fan of it. I want to pull it out, and I want to pull out 60-minute breakout NQ 2020A. And if you have the 200K portfolio, you can continue to trade these if you want, but officially for tomorrow's trade that starts tonight at 8:15. Now, if you're currently trading this portfolio, you'll need to exit this strategy at the open. 60-minute breakout NQ 2020A. Go flat and remove that. And I'm going to send you the new workspace in easy language if you have the 200K portfolio, and you can change and you can adjust that. So I have to press F9. And so without those two strategies, you see the total net profit is about 125,000 less. Let's look at the annual profit. We didn't look at the average annual profit was 128. But if we add those back, I'm going to do the undo, and then I'm going to press F9. Here's our original. It's 138. It's $10,000 more per year with the other setup, but the other setup is not favorable, and I'll show you why in this market environment. Still, you could still trade the other setup if you want, but this is more. This is a better setup for the current environment. When we've struggled, when we've had drawdowns before in the past, Nasdaq can be a wild card. And Nasdaq is in a very counter-trend environment, and I anticipate that will continue. So we still have our trend strategies in the Nasdaq. If you understand the 50K portfolio, you'll know that in the 50K portfolio we have trend strategies in the Nasdaq, and we have counter-trend strategies in the E-mini S&P. And so our E-mini S&P strategies are doing well. These Nasdaq strategies are struggling. So we're going to remove these two strategies, and we're going to add SR counter-trend to V2 1M NQ. So we're going to add this strategy right here. We'll have 39 strategies total instead of 40. And I'm going to do an update. And I saved it this time. So 10,693. This improves from 92.60. So we improve this total profit over drawdown. This goes from 138 to 131. It improves, or it decreases by 7,000 per year. But because of this environment, I think it will do better right now. And stock index swing, your risk to worst case drawdown is less than 9,000. It was around 12,000, and we've reduced that by 3,000. So it was, our risk to worst case drawdown was 12,000. Now our risk to worst case drawdown is about 9,000. We're not trading. The stock index swing strategy had a $1,000 stop loss and a $500 profit target, and it hasn't performed in the last 2 years. So we're trading a strategy that hasn't performed in the last 2 years, and we have the flexibility to do that with anticipation of recovery because we do have diversity. But with this type of market environment, we want to remove it for now. And we could be wrong. It could recover from here. And then the NQ breakout has a $1,500 profit target and a $1,000 stop loss. So I want to change this around. The stock index swing had a $500 profit target and a $1,000 stop loss. So we're dealing with two strategies here that had $1,000 stop losses, and we're going to a strategy that has an $800 stop loss, and it does not hold positions overnight. NQ breakout, actually this one, NQ breakout would hold positions overnight. The stock index swing does not. I'm talking about overnight strategies now. So we reduce our risk. We manage the strategies for a, we're adjusting for a more counter-trend market environment that I foresee here in the near term, especially through August, and we could switch back to this. But we're fortunate that we can switch to this setup and improve this number right here. We lose a little bit of this number here, but I don't think that, I think that going forward, our average annual profit will be higher by making this decision because stock index swing has been underperforming, and we get less overnight strategies. We have less overnight strategies. So we decrease that from 12K to 9K, and we trade less, and we have a tighter stop loss. So win-win, in my opinion, to make this choice. Again, we're removing stock index swing, 60-minute breakout NQ, and we're adding SR countertrend 2. And I am going to be emailing those setups to you, the updated 200K portfolio workspace. So here is what the 200K portfolio workspace currently looks like. Gap continuation. The Nasdaq strategies are right here. So we have 16 ES strategies right here. We have more counter-trend ES strategies, but all of the NQ strategies are trend. These are all trend strategies. So we're getting rid of this strategy, stock index swing. We're getting rid of 60-minute breakout, and this has an open position. So if you have this on Sunday night, when the market opens at 5 Central, make sure you exit that position and set up SR countertrend 2V2 1M, which I'll be sending that to you, and I'm going to show you what the workspace will look like right now. So we're going to delete this window here, delete it, delete this window here, and since we are going with SR countertrend 2V2 1M NQ, right here you see that? We already have the ES strategy for that. So SR countertrend 2 V2 1MES. This is this strategy right here. Copy the window. We're going to paste it here. And we're going to change the symbol to NQ. I'm going to expand this. And we're simply going to change the symbol to NQ. Right click, data, edit symbol. And change this to NQ U21. If you go back and look at the performance for those other strategies, especially stock index swing, you see it's gone through a drawdown the last 2 years, and it's not really the right environment for that strategy. So let me double check the settings on this. These settings are correct. I'm going to load some more history as well to double check that by going under data, edit symbol, expand this. I'm going to go 7 months back. This is not a strategy that trades frequently. So now we have it. Let's look at the performance graph. So the recent performance graph is up. It hasn't taken a trade since 7/27. So it hasn't it's only had one trade that's participated in the recent drawdown. So the drawdown is a little bit less since that time frame than the original portfolio. Let's look at that again. So here's what we're switching to. I'll have this updated, the portfolio calculated, updated for tomorrow's trade. 200K portfolio will be, this portfolio that we're trading right now will be a short 2-week window. We're just making a simple transition. We're not looking at this and saying, wow, this thing fell apart. We're anticipating a different market environment. We're 7,800 into a 16.9 drawdown. So once again, you're talking about what, $9,100. Roughly $9,100, $9,200 to the worst case drawdown, while the other setup had $12,000 to the worst case drawdown, and the other had total profit over drawdown in 9,260. We have 10,693. It is less overnight risk, and so I like this setup better. I think it's more appropriate for the current market environment. So my changes to this are not purely, this is not an optimization. The parameters aren't changing. We're just looking at the market environment. We're reducing our trend strategies in this portfolio setup. We're adding a counter trend strategy instead of a trend strategy, and we'll be continue to look at these adjustments. We've done this in the past where we adjust by reducing trend strategies, and Nasdaq can be a wild card, and it's certainly the biggest loser on the month right now for us. A lot of chop and a lot of extra slippage. So wanted to make this video for you. These are the adjustments. If you have the 200K portfolio, I'll be sending you, I'm going to send this email out, and I'm going to include this workspace. You'll just delete those two windows, copy and paste the ES, change to NQ, and then turn on automation. And you can let me know if you have any questions. And this will be the change starting for tonight. This is Sunday afternoon, August the 15th. Thought about this all weekend and wanted to make sure you had the latest, best setup for the current market environment for the 200K portfolio.